Hello and welcome to the session. Today is August 14, 2023. My name is Jose Blasco. How are you, everybody? I'm just gonna, here we go. Hello. I can say hello now from the side of the screen. Pleasure to be meeting you today, as every Monday, as we're getting prepared for the week ahead. I am highlighting the financial disclaimer on the bottom part of the screen, as always, as well, for you to read it completely. And the plan for today, as we do every Monday, is to go over 5 of the most important markets in the world, understand what's happening in such markets, understand the market conditions, potential turning points, trends, all of this, and more. And that way, as the week begins, especially if you trade equities in the US, and the US equity markets will open in 1 hour time. So this is a great opportunity to get organized and review and be focused. Okay. Anyway, so let's begin the session. And I will be combining on the screen 2 pieces of information. One is the real-time chart you can see that I get from TradingView in this case, as well as our newsletter that we publish on LinkedIn, which you also receive in email format. And that newsletter has information related to those 5 key markets: S&P 500, crude oil, gold, dollar index, and back Bitcoin. And more specifically, here's the information of the first market with the S&P. So I will be combining this information that is in a written format here with the real-time charts. So that way we can see things in a written format. You can also even take a screenshot if you'd like, and we can compare it and discuss it with the real-time charts so we can have a proper conversation. Also, no need to say that if you haven't done it yet, you should sign up for the newsletter, actually. So you also receive it on your inbox, and instead of having to take a screenshot from my screen, you can also have it on the inbox, on your own email inbox. And that way, if you cannot attend live, for example, or watching it recorded is a bit too late, so you can certainly use the information that you receive in your email inbox. Okay, so I guess that makes a lot of sense. So let's begin with the first market. The first market that we are going to analyze is the S&P. And the first thing I need to check is the auto climate condition, which is right here. So what is our auto climate condition? Our auto climate condition is thick and red, which means the climate is confirmed to the downside. Okay, and this is interesting because in the equity markets it looks like non-confirmed, where in the future markets it looks like confirmed. Okay, so there is a little bit more of an, let's say, energy to the downside on the futures and the equity markets. I guess that Asian and European sessions are pushing a little harder to the downside, I'm guessing. Definitely technology processes tons of market data, much more that a human person can do manually, and that's why I said I'm guessing, and that's the result of it. Thick red dot, which means down climate. Now, having said that, a normal thing to happen on the way down is 3. The current situation of this climate is 8. So we've surpassed by a lot what's normal. In other words, this market has been falling for too long. And statistically speaking, of course, it could drop 20 times more, right? But anything could happen anytime in the markets. We have to be ready for it. That is why we always manage risk, right? But from a statistical point of view, thinking of statistics as a reference, which is indeed a smart thing to do. So a normal thing to happen would be for the market to turn around. And definitely, since we just hit a green UFO, it seems pretty normal to expect a turning point at these current prices. So the climate changes back to blue thanks to those on-field orders, which, by the way, we call our market commentary a 3D market commentary because we look at the market in multiple dimensions. One is the climate dimension I just discussed. The other one is the UFO dimension, UFO that stands for on-field orders. And again, if you don't know what that is and you would be interested to know more about it or even use that on your own trading, you can check out our web. You can check on our website, on the specific section and get more information about the UFOs and how to subscribe and all of it. I just highlighted it on the screen. But basically, what we have here is buy on-field orders. So if I zoom in a bit more, we have buy on-field orders at these price levels. And as the on-field orders kick in, and we can see that already happening in the prior candle, isn't it? The market was falling and it was rejected, pushing back up. It was falling and kind of being rejected on the way up. Why? Because the buy on-field orders are acting. The on-field orders to buy are being filled, And if this continues, it's going to end up turning in the opposite direction until finding the sell orders, which are the same type of UFOs, but red color instead of green color. So that's what we have, and it's important information to be aware of. And this is what we have on the newsletter, where the climate is rainy, and the sell is 45.95.25, where the buy is 44.76.00, which is basically the current prices. So the third dimension of our analysis has to do with the expected moves, and for that we don't use charts. We use options data. So we get the implied volatility of options, and in this case, options S&P futures, and then we extrapolate, given the current process of options, what is the expected move. This again uses basically options pricing models, where we, let's call it, we reverse engineer how those pricing models work. This is an oversimplification, but I think it's good enough so you understand the meaning of those values. And basically, by reverse engineering, by extracting what the options prices represent, we conclude that the expected move on a daily basis for the S&P is almost 42 points, in a weekly basis 92 points, in a monthly basis 192 points. That is the expected move. So now, by knowing what to expect from a direction and turning points point of view and volatility point of view, so hopefully when it comes to trading equities, you are now in a good position to understand what to expect and how to manage the risk, and if a market is interesting for you to trade or not. The next market we can analyze is crude oil. So let me load crude oil real time. 1, 2, 3. Oh, how come invalidissimo? I cannot be. Oh, this is interesting and very unfortunate. It seems that there is a temporary error on TradingView. Okay, let me type symbol manually. It was a temporary glitch. I never seen that before. Anyway, what matters is that it worked. So we have crude oil futures, WTI crude oil trading on the CME, to be precise, on the NYMEX index, which belongs to the CME. And we can see last week we were talking about those UFOs. Notice how price came to the UFO, turned direction. So this is the importance of this information. We were dealing last week already with a climate which is absolutely not likely from a statistical point of view, but look at that. And this is why we manage risk, right? Because even though statistics suggest that a normal thing to happen on crude oil is going in waves of 7, the current wave is 28, which is absolutely not to be expected, absolutely unlikely, but it's happening. Okay, so imagine if you were a trader not managing your risk, you would be in a big situation, in a big problem situation, right? So we always manage risk, but having said that, the deeper it goes into the climate, the less likely it's going to sustain, and especially now that we hit that red UFO, it is indeed looking like crude oil may have to go down all the way to 76.87, where the next UFO is, and that will imply a change of climate, which a normal thing to happen would be to move in waves of 6 candles on the way down. That would be a normal thing to happen. Okay, so let's see what will happen. But when I say a normal thing to happen, I don't mean just because it's normal. I mean normal in the sense of the statistical meaning of normal, okay, which is what's expected, what's likely, what's average, what's most likely. Okay, so that's what I mean. So anyway, so going back to the newsletter, we have a sunny climate on the crude oil, but careful with that. Sell on field orders located 84.06, just a little higher. They produced the turning point already. 76.87 is the buy orders, much lower in price. And expected moves, funnily enough, exactly the same as the last week. 146 points a day, 322 points a week, 6.71 points in a month. Next market in line is gold. And by the way, for the ones of you who maybe trade only one market, but you let's say you trade crude oil, but you never traded gold or any other combination, so you may benefit from the courses that we have on our website. You may want to go and take a look, because those courses teach you about all assets, and in that sense, you may find something that helps you to learn something you don't know yet, and make you a more, let's call it, a more complete trader who understands better all sorts of markets. Anyway, so we're gonna look at gold, and when looking at gold real time, 1, 2, 3. Interesting. It seems I have to type the symbols manually. There is a little glitch on TradingView. Never seen that before. So this is gold, and when looking at gold, let's look at the climate first. And the climate is confirmed to be down. Okay, confirmed to be down, hitting a green UFO, and also A normal thing to happen is 5, and we are reaching 5. So we just hit what's normal in gold. So we could have a turning point any moment in time. Now, having said that, if this UFO is not respected and price does not come back up, then I would expect a very violent move to the downside for gold all the way to 1827. So interesting market condition where it may turn around, it's a normal thing, or it may just crash big time. So something to watch. If you are a breakout trader, certainly source of opportunity. Now, the one thing that is not appealing to me when it comes to buying now is the fact that red on field orders, sell on field orders are very close by. So if that UFO makes a bounce, the moment it's going to come to the red, it's going to bounce down again. So there is not much room to take advantage of those moves unless you trade very short-term intraday in 5-minute time frames, 2-minute time frame, 10-minute time frame, that kind of thing. And then of course you can find very good opportunities. But for this time frame I'm using, which is daily, there is not much here. Probably waiting a little bit would be much more advisable to have more clarity on the market condition, especially as that UFO brings us price higher or a breakout to the downside takes place, and then the situation is totally confirmed. So with that in mind, we have rainy climate, we have sell on field orders located at 1954.5, buy on field orders located at 1944.5. Expected moves out of looking at options on gold futures is 14 points a day, 31 points a week, 64, almost 65 points per month. Next market in line, the US dollar. The US dollar, here we go. So what's happening with the US dollar? Amazing moves, really amazing moves, but it's looking like it's about to end because a lot of sell on field orders are available here, right? So climate confirmed to be up. Normal thing to happen is 5. In this case, is 12. And let's face it, the fact that the dollar index went a little cuckoo, if you wish, it's why we can see market movement like in crude oil, for example, to be also out of what probabilities would suggest. Okay, because in the end, all those markets are priced based on the dollar index or based on dollars. So when the dollar does something extreme, everything will tend to behave extreme. Okay, so that's important to note and to keep in mind. And that's why we have the dollar as part of the analysis. Okay, so confirm climate to the upside, but careful, 12 out of 5, not sustainable statistically speaking. Sell on field orders where the red UFO is, buy on field orders where the green UFO is, that's 99.86. So let's take a look at a summary of conditions here, which is sunny climate, careful, sell on field orders 102.60, buy on field orders 99.86, moves 0.45 points a day, 0.98 points a week, 2.04 points per month. Okay, and the last market for us to analyze is going to be the backed Bitcoin, which is a Bitcoin futures contract that trades with ICE. And we are loading it here now. I guess I'm going to get the same error message. No, it worked now. So interesting, something happened to TradingView. So it's been fixed. So what do we have? We have a down climate, which is not confirmed on Bitcoin. Okay, down climate, which is not confirmed. And we have sell on field orders very near and buy on field orders much lower. Okay, so that implies that very likely that climate may end up confirming with a thick dot, and then we get to see Bitcoin falling down all the way to these green price levels and then come back up. Okay, this is what I would expect at this particular moment in time. So rainy climate in the Bitcoin, 29,490 is where the sell orders are, 27,420 is where the buy orders are. Expected moves 660 plus points a day, 1,460 points a week, 3,000 points a month. Again, it's pretty low volatility environments, similar to last week, much less than the prior weeks that we can see in the Bitcoin. Well, the 3 pillars that support what we do, you kind of saw it as we went through the market commentaries in it. We use advanced, intelligent trading technology that gives us an edge. Of course, you need to know how to use it and you need to know how to trade. So we also provide courses to support the use of our technologies and trading in general. And then we provide also coaching, live trading sessions that we do. You can check our website on the calendar page, and you can see the specific schedule where we get together live, we trade. We even do open meetings for everyone, even if you're not a client. So you can see what we do and you can ask questions and all work together. Economic calendar a few holidays, beginning of the week on Monday, isn't it? And then really we're talking about again a week where important numbers will be retail sales in the US, of course. Uh, um, uh, when it comes to rates, there are some decisions to be made in New Zealand in this case. Unemployment number in Australia, so gross domestic product in Europe, another CPI number in the UK. All of this is important, very important, especially if you trade currencies. But if you're trading other markets, typically the influence of the US market is larger. So retail sales, and on Wednesday, the FOMC meeting minutes. It's definitely something that has even more potential of increasing volatility and therefore generating opportunities. So keep that in mind. And finally, always happy and proud to share. And let me share a QR code here with our book so you can scan it and go take a look. Always proud to share the accomplishments of our book that was designated number one new release in Amazon in 3 categories. This is a book that teaches you how to trade no matter what, even though we use Forex as an asset, because in the end, no matter what you trade is priced in a currency. So of course, if you trade Forex, there is a direct application of, if you wish, of what's in the book. But if you trade other assets, believe me, this book is also extremely useful. So take a look, and obviously a nice way for you to get into trading more in depth or review the basics if you are more advanced. And also know that with the book, as you can see with the red sticker, there is a free course built in, and with our courses, you have free access to our tools for a while. So you can benefit from all of this by just purchasing our book. Okay, so yeah, thank you so much, guys, for joining me. As always, a pleasure to begin the week with you guys, and hopefully all this was clear and you are now focused and you are ready to have a fantastic trading week ahead. I definitely wish you that, and I will see you next week. Take care, everybody.